Hi, and welcome back, everyone. My name is Mike LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thank you for joining us again for Mike on Money, where we talk about everything that's going on in the market. And this week, we're going to actually take a deep dive into electronic vehicles or EV vehicles, what's going on in the market, where the opportunities are, and most importantly, how to invest. And we're going to be joined by a special guest today, Elliot Johnson with Evolve ETF. He's the Chief Investment Officer and Chief Operating Officer there. And he's got an extensive background with Fiera Quantum on the alternative investment management, also the Chief Operating Officer there, as well as in the banking sector with the National Bank. He also serves on several committees that oversee foundations for Upper Canada College, that brings a ton of experience and massive passion around EV vehicles and the market in general. So he's going to join us here in just one moment. As always, keep in mind, everything that we cover here is for information purposes only. Do your own due diligence or reach out to us. Just go to mikeonmoney.com. Happy to answer any of your questions, see how these investments can fit into your portfolios and the best way to get access to it. So with that, I'm going to have Elliot jump on here and join us. Hello, Elliot. Thank you. Thank you for coming on.
Thanks, Mike. Great to be here with you.
Perfect. So, Elliot, we're going to talk about EV vehicles. You've got great experience. I know we've had so many conversations about this market and the opportunities that we see coming up and currently, obviously, that's going on. But let's start things off. So, you know, when I look at the EV market and I talk to people, you know, all the projections basically say by 2040, it's projected that 90% of the worldwide vehicle production is going to be EV vehicles. Give us some background. Tell us a little bit about how, you know, how we're going to get there and why, you know, what's driving us towards that 90%.
Yeah, the big driver of a date at the moment are government targets. So 2030 to 2040 are kind of dates that are being set by most of the developed countries in the world. So Europe has got dates as early as 2025 in Norway, for example, with a lot of countries in Europe trying to get to 2030, 2035. Canada has signed up actually for a pledge called the EV 30 at 30 pledge, which is we're one of about 10 countries that have signed up to say that we will commit to getting to 30% of our car market be fully electric by 2030, which is, I think, a reasonable kind of target, given that, you know, 30% is not 100%, and there's a lot of work to be done to get there in terms of infrastructure and people changing over their fleets of vehicles, consumers buying new products and so on. But right now, those targets are being set mostly by the governments who are trying to move the ball. And this is all part of the overall government action around the world to do with climate, to do with carbon responsibilities, accords like you hear in the news around Paris and trying to hit some of those targets there. This is where we're going with the transportation industry. And I think it's good, it's ambitious. I think there are hurdles in the way. I'm not sure we're going to hit these dates that everybody's set out ahead of us, but you definitely don't get anywhere without trying. And every government around the world is definitely making a massive push to get there. And it's not just, you know, in the developed world. Emerging markets, China and India are a big part of this as well. So we really are seeing every single country in the world saying EVs are a priority. They're setting targets for their markets to get there. They're putting incentives in place for manufacturers to create these products, and they're building infrastructure. And you know, we see that kind of in the news every single day. There's just a massive amount of news coming out all the time about this transition that's underway. So it's particularly exciting for investors right now because everything's changing, and we've got you know, got a huge amount of money to spend to get to where we're going.
Right. Now, I can't help but notice the kind of the flagship that was missing from that list was the U.S. and obviously the previous, let's just call it the previous administration, was not on board necessarily with EV targets. Do you see coming up, for example, we've seen Quebec, you mentioned Norway, we've even seen Quebec talk about 2035 as well, I think is a target to get, EV only for new vehicles. Do you see that starting to come in the US? I would see, California's always been an emission kind of leader in the US. Do you see the states potentially coming up with their own, the individual states coming up with their own kind of targets or goals?
Yeah, well, as you mentioned, California has a goal of 2030 that they set about 6 months ago. So they're always the leader. California emission standards is kind of the gold standard for emissions of cars. And the US is certainly trying to get in that direction. Joe Biden has promised a $2 trillion energy plan that his administration is working on, and that calls for 500,000 new electric vehicle charging stations to be built across the continental United States. So that kind of government incentive in terms of investment in infrastructure is going to kickstart what already is a pretty thriving industry in certain parts of the US that relates to EVs. I heard somebody the other day refer to the Tesla Model 3 as the Toyota Camry of Silicon Valley. So you actually do have these pockets of the US where adoption of EVs is very high. Now, obviously, it's certain groups of people, more so than in other areas, for sure. But the US is an interesting country. They haven't signed up for the EV 30 at 30, but they have recommitted to Paris since Biden took office. And so they're sometimes an odd country to try to make a kind of clear case for, because they do chop and change what they do based on the political winds. And they may not sign up for specific pledges, but nonetheless, the free market there is driving this forward. And let's face it, a huge amount of the EV technology revolution is coming from the US, whether you're talking about battery tech, Tesla's a leader, but they're not alone. The autonomous driving tech, all the semiconductor businesses. There's a lot of technology within the US. And some of it goes into domestic products, a lot of it does, but also a lot of it gets exported around the world. So they're integral to the story. I don't think anybody wants to leave the US out, but they're harder to plant. They're not planting the flag in the way that, Canada has said, by 2030, here we're going to be at 30%.
Right. Now, you brought up there a couple of times, Tesla being a leader and Model 3. I mean, I think for most consumers out there, when we say EV car, I mean, Tesla, of course, comes to mind. But, certainly, and Vancouver is probably the California of Canada as far as leaders in driving Teslas. I mean, pretty much here, there's every third car is a Tesla. But as far as new entrants, I mean, they're already seeing a lot of new entrants in the market. Where do you see that kind of going in the next few years? Not just from the incumbent manufacturers, but kind of new players on the block. Do you see a lot of growth in that area?
Yeah, we do, and we've seen a lot of investment returns in that area. For the most part, the new companies that are having the most success right now are actually in China. Companies like NIO, XPeng. In fact, there's a company called BYD that not everybody has heard of. It's not a household name, but it's actually the biggest EV maker in the world by unit sales. So you see a lot of growth in new brands and new companies in some of those emerging markets where the incumbent automakers don't have the same level of brand awareness and customer loyalty. Whereas in North America or in Canada or what have you, I think EVs are mostly going to come to consumers through electrification of products that we're already comfortable in. So whatever, you might have been buying the same car brand for the past 20 years. Maybe you buy the same car that your parents bought, but it's going to become electrified along the way. Maybe your next car is a hybrid, and maybe the one after that is fully electric. So the rollout is going to change depending on the market. But this is where we really like the idea of taking a broad view across the entire industry, because you can have companies show up from almost out of nowhere to become large multi-billion-dollar businesses in emerging markets that that are just eating the market there because they maybe are taking advantage of government incentives. They're taking advantage of a car buying market that's open to trying new things, and you don't want to ignore those. So you do want to kind of spread your view out to be a global perspective, because this is a global thing that's happening, and it does affect every corner of the world in terms of the car market.
Right. Now, so on that, we've been talking about cars. We're talking about, people, the consumers, right? People out there buying their Model 3s or Polestar just came to Canada. Talking about another, I guess, a combination of Swedish Asian brands coming to Canada with their vehicles. But where do you see the commercial space? You talked about Biden's budget, and that they're talking a lot more about the utility vehicles, the industrial vehicles. Where do you kind of see that as fit into this growth story?
My opinion is that the fleets are going to electrify faster than consumer automobiles, and in many cases, not in every case. There are going to be lots of use cases where it's impractical to drive an electric vehicle because you're going to go somewhere where there's not good charging infrastructure. So work sites, for example, may still need gas-related cars for a while. But there's a large amount of fleet vehicles that are used every day by companies that have a very clearly understood use case that EV charging just works for. So if you think about, for example, a delivery need within a city, you might have a factory or a warehouse, and you're going to deliver a whole bunch of stuff around the city through the day. You know exactly where your cars are going all day long because they only ever go from point A to point B or within a defined group of destinations. And so you can build in electrification into that fleet use case very easily because you know exactly where those cars need to be, and you can therefore make sure they're always charged. Don't have any questions around range. You know that you can make sure they come back to the depot and then they all plug in when they're being reloaded and that kind of thing. And then it drops the overall cost of ownership for that company, both in terms of the energy cost, right? You're not paying for all this gasoline, but also from a maintenance cost, because electric cars are typically much cheaper from a long-term maintenance cost perspective because they have very few moving parts. Some of them kind of brag they've only got 4 moving parts, that's one on each wheel kind of thing, and they don't have all the millions of little bits that go into an engine. And so the break even on a fleet is a different set of kind of mental math than it would be on a consumer application, where you still need to kind of get past some people's concerns about, can I take this car to my cottage? Can I drive across the country? Can I do these various things? And so I think fleet vehicle use is going to really take off. And you already see little bits of that. Just to pick another kind of industrial use case or non-consumer use case, Ballard Power, one of the companies in our portfolio, has a whole bunch of fuel cell electrified buses in California. And they can do that because they know exactly where they're going. And it's a great kind of use case. And that's where some of this technology proving ground is happening, right? You can take that, how they're going to get used. The companies building that tech can watch how it works. And then that stuff filters down into making, the car that you and I buy better and better each year as they learn from these experiences. Right.
Now, you talked about kind of that cost model that the fleets can look at, and obviously theirs is really, really defined. But as altruistic as countries want to be and people want to be, we've seen in the, if you go back 10 years in call it green tech or green energy, the big barrier has always been industry not wanting to spend the extra dollars, right? It always comes down to profits. It seems a bit different these days. Maybe you could talk a little bit about that side of things that might be driving this movement, but not just by countries, but by industry as well. Are we at that point where, hey, this is more cost effective, I can make this change, and regardless of my beliefs of climate change?
Yeah, that I think is the question that goes through everybody's minds when they're shopping for a new vehicle, right? Is that what's my break-even point for this experience? Because I'm not going to pay for gas. I have to pay a little bit for electricity depending on when I plug in my car, but the car maybe costs more than it does when you buy something with a gas tank that you're just gonna, you're gonna incrementally pay for that over time. The stats that we've seen in our research is that roughly around 2035, the sales of EVs are going to cross over with the sales of traditional gas engines. And that's really because the cost of buying a battery car is getting very close on a total cost of ownership level to the cost of buying a gas car. Now, there are a lot of variables that go into this, and the stats sometimes vary as to, are we there yet? Are we there with government incentives? Are we there if you strip out government incentives and it's a totally level playing field between these two vehicles? I think we're getting really close. And that battery cost is probably the single most important input cost to the price of the car for a consumer, because it's the sticker price that ultimately is their decision point for which car do I own. And that is far bigger of a decision point than, running the spreadsheet about, am I going to the gas station or whatever. And some big changes are coming. First of all, cost of batteries is dropping, but the other thing is battery technology is improving. And solid state batteries are on the horizon, and they're scheduled to come out sometime in the next 5 years to certain cars, and probably be the predominant EV energy storage technology within the next 9 to 10 years from now. And solid state batteries are a meaningful change. They are going to be about 45% more energy dense, and they're going to be significantly lighter per watt hour per kilogram. It's kind of the number that they throw around. So when you get over that 400 watt hours per kilogram and you've got 45% more energy, this changes the game, because now, first of all, your car for the same range becomes cheaper. It becomes also increases the range because it's lighter, which again then deals with all this sort of range anxiety, and it becomes cost effective. And then the economy of scale starts to tick off as well. So we're really looking at solid state batteries along with battery cost as the biggest inflection point for consumer adoption of electric vehicles. And I think it's going to be like any new technology, like your cell phone or your computer in the 90s, the kind of thing where you're going to see every time if you do a 4-year lease, or you turn your car over in 4 or 5 years, you're going to just be blown away by the improvement in the technology every time you do go to a new product. And that's going to have a kind of an effect, a positive reinforcement cycle that's going to happen. And we're getting to that tipping point. I think it's in the next 5 years that we get there. And it will get to a point where it becomes absurd to buy a gas car, because electric cars are cheaper, drive further, cleaner, et cetera, et cetera. Like, it's just going to check all the boxes. And then you're going to be, the gasoline engine is going to be a bit like the manual transmission. There'll be diehards who complain that it's not around. It doesn't sound like it used to, but everybody else has like moved on from there. I think that's coming. I think it's coming in the next 10 years for sure.
Now you brought up kind of the cell phone example. And being an old timer myself, the big thing when, the iPhones and the smartphones kind of came out, it was like, there's more technology, there's more powerful technology in your hand now, your pocket, than when they launched, Apollo 11 to the moon. Are we headed that way with cars? Like, are we now going to be driving basically rocket ships as far as technology goes?
Yeah, for sure. The car is becoming a smartphone that happens to have some seats and, moves you from place to place, right? It's incremental, but increasingly the car is going to take over more of your job as a driver, until eventually at some point you stop driving. We're a fair ways away from that. But even now, my new car, I just got a new car last year, and it backs up by itself out of my driveway, right? And it parks by itself. So that's a job I don't do anymore. You have new cars coming out, Audi and BMW, to pick two brands, it'll drive for you in gridlock. So during gridlock, you can be on Facebook. These things are starting to move to the point where, you start your driving job becomes smaller and smaller. So that's happening, and that's all based on the semiconductors and the smart big data kind of transformations that's changing the whole world around us. Combine that with electrification. Combine that with the upgrades and improvement to our power infrastructure, solar, wind, and distributed power generation, right? The number of Tesla owners who have a solar wall on the side of their house, and they're making their own power essentially at home. So this thing starts to change the game, right? Like, the idea that I think it's going to be the kind of thing that our children are going to look back and they're going to say, why did you have a machine that burned oil that you dug out of the ground, in another province, or, in some places, another part of the world, right? What was going on with that? Because that's not how we work anymore. So that's kind of where we're going. And it's becoming, going to become digital gadgets. And then who knows what the new things are that happen. Maybe you go on a long trip and you can have a nap because you're in the autonomous driving lane and your car just doesn't need you. And how does that change you're thinking about your commute, you're thinking about where you live versus where you work, you're thinking about, all kinds of things. So it's pretty exciting. And we're moving there incrementally. I mean, look at backup cameras, right? My teenagers who got their driver's licenses could not back up by looking over their shoulder. They would have no idea what to do because they've never experienced doing that. For them, it's a computer game backing up, right? So those are the kinds of things that are coming, and it's pretty fun to see all the changes on the horizon.
For sure. But with that, obviously some challenges. I know just, the tail end of 2020 and into 2021. I mean, just looking at the general vehicle market, if you walk into a dealer today and you ask, hey, I want to buy that new model, the availabilities are way out. I mean, we are even seeing some bankruptcies of dealerships in the United States because they just cannot get inventory. So, we're seeing this in the broader car market. I mean, you mentioned people going to the familiar brands. I've got a close eye on the new F-150 Lightning, I think it's called, the new electric one. Do you see bottlenecks in EV vehicles, and kind of where the really tight points right now?
Yeah, there's a chip shortage right now that has resulted a little bit from COVID, where back in March of last year, when the whole world froze up and companies had to go into survival mode, the automakers canceled a bunch of chip orders from the Far East where they were being made. And as they started to bring those product lines back into production, they're kind of at the back of the queue because, the cell phones and smartwatches of the world are, they sell so many more units. They've got better access to the fabs. And so we have a shortage of chips in the car industry. It's slowing down production of the F-150, the electric one you're talking about, which, by the way, is one of the most exciting products, I think, in a long time in electrification, because it's not just move you around, it's also power your whole work site. You can plug in, a saw and any kinds of equipment to that. That changes the value of your pickup truck, right? Anyway, but that's needless to say, they're not making them fast enough, and they're getting amazingly good reviews, the few that they've made so far. So this is all, that's certainly a bottleneck. I think it highlights the point that you were making earlier, that the car is becoming a digital device, right? Nobody would have thought of worrying about microchips 20 years ago when they talked about the car market. Wouldn't even have been a relevant thing. And now it's the limiting factor on production. So these are digital devices, and the forecast is for this all to kind of bleed itself out over the next 12 months. So you probably see a slump in new car sales right now. We've seen a massive spike in used car prices at the moment, partly as a result of that. And then you're going to see a massive pickup in new car sales probably sometime in Q1, Q2 of next year, as the supply comes back online and everybody's been waiting and holding out. So finally I can get the car that I've been looking for. But it also kind of shows that, they can't just build the old car. These are technology focused companies. And if you watch any of them, and they all have technology days where they actually just talk about the tech. Tesla calls it their battery day. VW just had one talking about their whole brand new EV platform. They're standardizing what they call the skateboard, which is the wheels and the battery part. And they're going to apply to everything that VW does, and they make all kinds of different cars. These are tech companies. These are like tech presentations, like the kinds that you expect to see from Google, but now they're actually happening, from car makers. So that's going to hold things up. Another one, just to, add to your thought around what are the hurdles and the bottlenecks, it's battery production. It's going to come down to, can we build enough batteries fast enough to meet these goals? GM actually has just announced that they plan to start extracting lithium from seawater because they need lithium in quantities larger than they have got commitments from miners to give to them. So that's another place where technology is changing everything because of the demand from this. And so GM's partnering with somebody to build a massive factory that's going to take seawater and pull lithium out of it. That'll go into their batteries. And you're going to drive around a car that partly came from the sea. I mean, it's amazing, but that's where the world is going. And it's more, and transportation is obviously a big part of the overall electric future that we have. But battery production is probably going to be one of the most interesting markets to watch over the next 20 years. as batteries and electrification change everything in our lives. So yeah, we're going to have these starts and stops. And that's why some of these dates are hard to really put a pin in and say, yeah, 2030 is the date. It doesn't matter. It doesn't matter if it's 2027 or 2035. It's where we're going.
Yeah. Well, no, I think you've highlighted, definitely, like you said, there's there are a few bottlenecks, hurdles that we have to get over, but hopefully we're headed in the right direction on that front. The, for investors who follow me or have been with me for a while, they know, Evolve has an ETF with symbol called CARS, with the symbol being CARS. I've had clients in it for a while, because I think you really highlighted, how broad, if investors are bullish towards the EV market, how broad the supply chain is. How it's not a matter of just going buy Tesla stock or NEO stock, or it's such a broad exposure, which is kind of why I love the CARS ETF, for people to get direct exposure. Maybe you could tell us a little bit about how you guys run that and what's in there.
Yeah, thanks for that. This was one of our first ETFs that we launched back in 2017, and we built it specifically for this need. We were the first in the world to put together a product that tracks the supply chain of all of these changes happening in terms of electrification and autonomous technology that go into the car. And the inspiration for the product, to be honest with you, was Tesla. In the summer of 2017, Tesla's market cap became bigger than BMW, but it was losing money on every car that it sold. And so, we knew that investors wanted this. We knew that there was something happening there. And as we started to do more and more research into it, we realized that this is an entire industry going through a transformation. And that's exciting because it doesn't happen very often. So we worked with our index provider, Solactive, to come up with a rule set for the index that the ETF tracks. And that rule set is essentially has two components to it. So the first is the EV companies, and Solactive relies on FactSet data for classifying companies. So companies like NEO, XPeng, BYD, and Tesla are in the EV category. We get each of those. If they're classified EV, it goes in the index. So you do have Tesla, but it's equally weighted. So it's one of 35 positions in the index. You're not going to be overweight. We then get the battery makers, and we get the chip makers that are relating to the auto industry as well, because this is the tech that goes into building the car of the future. And then we have the existing supply chain. We take the top 5 companies by R&D to sales. So we get the ones who are investing the most in the future. They go in. And then there's a final car manufacturing category, which is companies that are multi-type electric car, traditional gas car companies, for example, VW. They end up in the index because there's no doubt about it at this point. VW is moving into the electric future. They've got significant commitment behind them. They've got a huge investment in it, and they are fielding some pretty exciting electric products in reasonably large quantities. So FactSet classifies them as kind of almost like a hybrid engine. They're like a hybrid car company. They've got a little bit of each, and they go in. And so that portfolio, that set of rules, is rebalanced 4 times a year. It's equally weighted because the market cap variance can be quite large. And this has been an effective mechanism for capturing this universe since we launched the fund. And one of the ways we know that is because when we launched this index, NEO, just to pick one of the most successful Chinese car makers, was not a public company. And it's now one of the biggest EV companies in that part of the world. And the index recognized that, added it in, and the investors who've been holding the fund over that period of time have done quite well on that position, just to pick that one name. So we believe very strongly that you need to have a diversified approach, because as with any transformation, there'll be some winners, there'll be some losers, and there'll be some real rocket ships that take off. And it's very hard to pick up front which ones those are going to be. It's so much easier to know this theme is happening because you just walk out your door and you see the Teslas driving around, you read the news. And so we built this for investors to have a tool to access the theme. And now, you may own cars and you may say, well, I have my favorite couple of car companies or battery companies, I'll buy those separately, and by all means. But this is the broad theme exposure. And we think this is, we're very excited to have built this product, because this is the kind of thing, if you if you could go back in time to any of the big transformations that have happened from technology, internet, mobile phone, or whatever, if you could just buy the category, you had all the upside with a lot less, your idiosyncratic risk goes away, because if a company is not working out, it's going to get dropped out of the index, and off you go. And so that's why we believe diversification is an important thing. And it's been great to see people using this in their portfolios to access this theme. There's not a lot of overlap with traditional indices because of the nature of these companies right now. So it's a way to put growth back into your tech allocation that maybe the NASDAQ isn't giving you in the same way as it used to. So that's really what the product's all about. We continue to be excited every quarter when we see what's happened with the index, and are there any new names in there, and who are these companies, and so on, because it's one of the fastest changing industries that we're tracking at the moment.
Oh, that's awesome. Well, Elliot, I'm going to get you to stay on. In the interest of time, I'm going to let everyone off the today's video. Remember, everyone, go to mikeonmonday.com. You can see our other videos. This is also going to be on our podcast. You can click there to get access to that. But with that, we'll have another video next week for you to keep you up to date with what's going on. Thank you, everyone. Talk again soon.